Alright, welcome back again to another past section of my technical analysis. So in this video I'll be quickly sharing with you my current bias and what I'm looking for in the market on GBP JPY. So we are on the daily time frame. So let's figure out our current direction of the market, the strength of the market is on currently. So first of all, let's kick off from the daily structural view. So from the daily structure, what we can see from here is let's work with what we are seeing here. We have a low here, a high, low, we create an high, a low. Now if we observe carefully, after this low, price went off this impulsive move here. Now we are looking at later on we're going to scale down to see in a more smaller structural view, but let's work with the big structure here. Now from at this point, price failed to create a significant high, failure to break above this daily structural high. Now it's fine for a price to react from a daily structural level, key daily structural level. Now we can see that if you can see the initial reaction of price from this level, which is also a psychological number, which is 19900. We have this initial reaction from this previous daily structural level, which previously formed kind of double top here. Now we have this initial reaction. Now after the reaction, price went back again to retest the level and give us the same reaction, more in a more aggressive manner, which we have this bearish displacement from the key daily structural level. Now what is this telling us now? Normally we're supposed to expect, like, once we have this low, what we're expecting from the market to create a structural high, break above, for us to see this market is still on a bullish move. We expect a break of this daily structural high to create a new high before a retracement. But what we can see here is we have a failure to break above this daily structural high. So now what we are going to do here, we want to see how price react around this structural high. So let's go a little bit to a lower time frame to see what the structure is showing us. Now this was the daily structural high that we observed from our daily time frame, and this was the low before this impulsive leg. Now this was the initial reaction. We have this massive aggressive push to the upside to the daily structure. Once after this aggressive push, we have a reaction from the zone, which was kind of retracement back. Now price continued the bullish move to the upside, failure to take above that structural high that it created. Now if you can observe carefully, it react from the same level again to the downside, breaking below this structural low. So what you can see from here now, after this, we're going to observe this impulsive leg to the upside, this move that's supposed to take above the previous daily structural high. So let's still scale down to lower time frame. Now from this time frame, what you can see here is we have this impulsive leg kind of creating structure. We are going to view this now. This is 6-hour structure. So what we are observing here is you are creating a structure to the upside. Now for a trend, for us to say a market is still on a bullish run, we expect price to keep on taking previous structural recent structural high. This was if recent last structural high that was created, a pullback, and we expect price to close above this structural high, but here we have a failure to create a new structural high. Now once we had a failure, now for us to say also a market is still on a bullish move, we not really expect the previous low, structural low, to be taken out. Now after price failed to take this high, it came back, create a relative create equal low, push back, failure, another failure again to take this high, and will break below the recent low, creating a shift in market structure. So from this level, you can see that if you can closely observe, you can see kind of double top. This is a price correction that this, now we already know that this level is also previous daily structural high, which price is also reacting from, creating a kind of price correction here, double top, failure to take above this high, also break below the neckline. Now aside that too, you can see figure, if we plot our trend line, you can see that we are break below the trend line, so you can see take that out. Now what we can really observe from this time frame here, we have, so from this point now, since we have a double top here and break above the trend line, failure to close above the previous daily structural line, we can see that the market have shift. Also we have neckline break, which is shift the market, so we can conclude that the current direction of the market is bearish. The current direction, the strength of the market is bearish. So what we should be looking out for is to look for opportunity to sell. Once we have figured out that the current market direction is bearish, so what we should be looking for in the market is to look for opportunity to sell. Now since we are looking for opportunity to sell, the next thing to do is to figure out the level where we are going to sell from. What is the next level we are going to sell from? So let's still scale down to a lower time frame. Now, before we scale down safe, now the general rule for trading a double top is to, now we can see frame our entry from this time frame. The general rule from what we are seeing here, the general rule for trading this type of pattern is to wait for this pullback to retest this level, which is 19600, kind of break and retest this level. Find, once we retest this level, we can take our entry from here downward. So the other way to frame an entry, also at least to make sure that okay, where you are taking the trade from is accurate. So let's scale down to what, let's go to the 4-hour. So from the 4, we can see apply our technical to trend line. So if we draw out our trend line from this, from recent swing level 1, 2. So what we're expecting from the market, we're expecting from this trend line, we're expecting a second touch of the trend line, which is in conjunction with this previous psychological level, this level. So what we're expecting price to push to this level, can take an entry from here, push it a touch or to be break. So we are going to carefully observe this level to take an entry or further push to the upside. Now we can see also apply other technical tool to figure out where to take the entry from. So since we have created swing lows, so this typically have created a bearish structure. We have the high, high, low. Now once the price push up to a significant premium level, we can take our step. So we can also apply our Fibonacci here. So what I'm looking for, this is also like corresponding with our psychological level. So about 61.8 fib level. So we can still put that into consideration. Now you can see scale down again. Now if you can observe carefully from this time frame, what you can see here is I see a kind of a supply zone here. This was the recent supply before the displacement, the aggressive sell-off. So this is also a kind of corresponding with our analysis. So if price does not hold here, we still have another supply at this one. So these are the two level I'm looking to take say from. If price is not hold there, definitely will come here. So these are the two level I'm observing to take trade from. Thank you.